A lot of people want to take $500 to $50,000 in a month, and that's nearly impossible. And if you do it, you probably won't be able to do it again. And I think that if you want to really live off the markets and become a full-time trader, it's about learning the skills to be consistent.
All right, so we have Kathy Lien today on the podcast. Kathy, good to talk to you today, of course. You came up to me about a year and a half ago with an idea to write a book featuring traders, especially about prop firms, traders who are funded, who manage capital. And I said yes, and we kind of wrote this book together, which you have in your background over here. But good to have you here on the podcast. Good to kind of talk with you about this book and also discuss more about kind of how it happened and your trading journey as well. So good to have you on the podcast.
It's always good to be on and talk to you, Etienne.
Awesome. Let's begin with this. What's been going on since we spoke? I guess it's been probably a year or 2 years on the podcast here. So tell me a bit more about kind of what you've been up to.
A year, 2 years is like a lifetime, I think, in the world of trading. I think in the past 2 years, it's really been an evolution in the trading industry. And what I find really interesting, Etienne, is that we have a tremendous amount of people who are learning to trade for the very first time as a result of all of the marketing efforts and interest in the prop trading space. You know, previously, a lot of people have been coming directly through Forex or CFD trading, and this is the traditional brokerage route. And this had been around for 20 years. But in the past, 3 or 4 years, there's been so much new opportunity, new interest, new entrants as a result of this great amount of prop firms that are giving traders the opportunity to basically trade with very little starting capital. It's not even seen as starting capital. It's basically a challenge fee or an entrance fee where you pay a couple $100 and you pass the prop trading challenges. They have a couple of different rules and it varies by firm. And after doing that, you can trade anywhere between 10, 25, 50, 100, 300, $1 million worth of capital, which most people don't have at their disposal to trade. So this really opened up the eyes, I think, for a lot of new traders, especially those that are young, somewhere between 20 to 25 to 30 years old. And those traders, they don't have a lot of starting capital, or even if they did manage to save enough money to trade with, they didn't feel like they had the risk appetite to put that all into the market without knowing what they could do. So they saw the opportunity in prop trading. And, you started by asking me the question, how has my journey evolved? I think I'm speaking to a lot more new traders and, helping them, learn to trade and learn the right way to trade, while at the same time, learning it differently, because trading prop is also very different from trading your own broker account.
Good point, definitely. I mean, one thing that you had an idea for in the book is we have people who've been trading for, like, in competition. They've been passing these competitions over time, of these trading competitions over time. What do you think makes it that people are able to pass these competitions? Like, there's a few guys in the book that really were able to do it repeatedly, multiple times. Why do you think that is? Is it a set of skills they learn, or is it something else that kind of comes into play there?
Yeah, that's a really good question. Like Rob Hoffman, I think, won more than 30 international trading competitions, which is impressive because it's hard to win one for most people, let alone 30, right? And I think that, first of all, it does take skill. And it does take experience. We interviewed in our book 3 trading champions of competitions, and they are all older. They're not young. They are, they've been around the block for a while. So what really sets them apart is that, especially with Rob Hoffman, is that he was very patient in the competition. I remember in my interview with him, he would tell me about how he got teased by a lot of the other participants and even by the judges who said, so-and-so is taking this trade, so-and-so is taking this trade, Rob Hoffman is doing nothing again, or still doing nothing. And I think that was really fascinating because, he stood his ground. He was patient. He waited for his perfect setup. And when he waited for the perfect setup, that's when he pounced in. He didn't feel the pressure. And of course, we all sometimes feel the pressure to trade, period, just to be in on the action. But he had the discipline and he had the patience to sit and wait for his perfect setup time and time again. And I think that's really a testament to, why he was so successful.
One of the things that I really kind of listen to the book is the fact that a lot of traders we've interviewed, they treat prop firm as like a way to get to a different level afterward. Like they might go for prop firm first, then they go for like being a fund manager, and then they create their own fund and run it. I think it's a different set of skills, but things you learn from prop firms definitely apply later on. Tell me about some of these people you've seen that go from prop firms and kind of use it as a building stone to propel their career after that.
I actually am seeing that now as well. With a lot of the newly funded traders that I'm talking to, not the ones that we interviewed in our book, but in general, they are experiencing the same things that the more successful traders in our book have experienced, which is that, yes, they learned to trade, maybe due to the prop trading model. They took advantage of the low barriers to entry. Then they realized they wanted to trade their own way. They realized they wanted to trade their own way. They realized they didn't want to worry about not being able to carry positions over the weekend or not worry about, drawdown limits or consistency rules and things like that. They really just wanted to trade their way. So I'm seeing even now that, traders who are being funded and getting payouts from the prop firms, they are also opening up broker accounts and diversifying and trading maybe slightly differently and maybe trading, in a way they feel more comfortable in their prop accounts. And we're also seeing a lot of the funded traders taking some of those profits and putting it into their broker account and, kind of diversifying. They're not doing it 100% because they still very much enjoy the prop trading process and the opportunities and the payouts from there. But, there are a lot of restrictions, and these restrictions are something that the traders who have done it for 1, 2, 3 years in the prop trading space, they are seeing the limits to it, and they're opening broker accounts. So they're going to do a similar evolution as the traders in our book. Some of the traders in our book are, traders who are funded through the funded trader model. Some of them have been prop trading for decades. Some of them have been managing funds, but they all kind of went through a similar process where they dabbled with, something that was lower risk, less capital at risk, and then became more confident, and they diversified into a broker account. And that's also, why a lot of brokerage firms are getting into the prop space. Or some prop firms are becoming brokers or aligning themselves with brokers because they also see this evolution that when these traders get good, they feel like, or even if they're not that good, they're already interested in trading, and they see that there are benefits not having the limits in the prop trading model.
Interesting. I mean, one of the things I noticed a lot is the fact that traders with prop firms, especially in the book, people we talk to, they'll have like a very different trading styles. Like there's not like a one style for prop firms that work the best. You have guys who are scalping, guys who are maybe day trading, or more even swing trading, even like position trading sometimes, like very high time frames. It's really kind of based on what they like and what fits them, not just what fits the prop firms.
It's true. And I don't know, I'd like to hear from your experience, because I feel like a lot of the traders, because when we wrote the book, we kind of split up the traders that we spoke to, the ones that we knew the best and we had, relationships with, and we knew their track record. I know from my experience in the traders that I spoke to, while it is absolutely true that they all trade differently, what I found fascinating, Etienne, was that they actually they traded the same way, regardless of how different they trade. They traded the same way that they learned to trade, which is that if they started off learning to trade with fundamentals like Nick, they still stuck with trading with fundamentals. If they learned to trade price action, they still stuck with price action. If they learned to use a specific indicator, they still learned to do that. They still continue to do that. And so I found it fascinating that they stuck with what they learned initially. And in many ways, that's true for me too. I'm a fundamental trader at heart, and I use technicals to help me identify entries and exits. And this is how I learned to trade when I started my career. So I don't know, with the traders that you spoke to, if there was more of an evolution in their strategy, or in some ways they kind of stuck with what they started with.
Yeah, it's interesting. You kind of gravitate towards certain things in trading. I feel like certain tools or concepts that, you just cannot never leave. So it's good that definitely you mentioned this. I feel like people are changing some things over time. Like they change the way they sometimes learn to adapt it better to them, but they kind of keep the same general concepts for a lifetime, I would say, for a long time.
And I think that's a testament to the fact that there isn't just one thing that works. There isn't just one strategy or one time frame or one instrument that works. I think it's a testament to the fact that, there are many different styles of trading. And at the end of the day, it's about, being the master of your instrument and your style.
We have a chapter in the book about really like a summary of tips that we found these traders have in common. Like some common things that I could name a few here, but is there anything you find that was surprising to you that all these traders have they kind of do the same thing, kind of have the same mindset or the same practices? Was there something that kind of struck you that way?
Well, one thing was what we just talked about, which is that they, what I found really fascinating was that they still traded the way that they started to learn to trade. Another thing I think is that even for me, for the traders that I interviewed, even the ones that were swing traders, they still did some day trading to a degree. And a lot of these traders, were in and out of the markets quickly because, if you think about it, these are traders that are living off the markets. So they need an income from the markets. And so in order to have that income, they need to reframe their mindset and look at day trading as cash flow. That, day trading is their cash flow that they can pull out for their income, for their living expenses. And their swing trading is kind of the investments for, bigger growth, bigger opportunity. And I think it's really important for traders to understand, which is that if you want to become a full-time trader and you really want to live off the markets, you have to start thinking about how much do you need to live on, and then start making that money on a weekly basis, a bi-weekly basis, a monthly basis, and be able to achieve that consistent cash flow, before you actually turn into a full-time trader. The other thing I found interesting, Etienne, is that all of our traders knew when to walk away. That if they were having a bad trading day, they had specific rules in place to tell them when to stop. I think one of the common rules for a lot of my traders I interviewed was the 3 strikes rule, which is that if you have 3 consecutive losing trades, just stops. You're not in sync with the market. You're not, you aren't positioned properly, or either your mindset is not positioned, or your strategies are not working, or the market is simply not, if you're a trend trader, the market's not trending. If you're a range trader, it's not range bound. It's just not working for you. Stop. They knew to stop, and then, just come back either the next trading session or the next trading day. They wouldn't try to keep pressing their luck, and they would have the 3 strikes and they're out for the day rule. What do you feel like were some of the revelations from the book that you found particularly interesting and valuable?
I mean, I love the lesson on managing expectations, like being able to aim for less, but also kind of being able to take a step back and look at the long-term picture of things. Most of the traders are not trying to rush like big P&L in like a week or 2 weeks. They try to take a step back, follow the same routines, follow the same kind of principles that they follow, and then kind of just let it play. And eventually, after a while, it kind of gets some good results. But in the very short term, they don't have a target, or they don't try to make a certain return and try to achieve something really fast.
Yeah, I think that's very true. I mean, a lot of people want to take $500 to $50,000 in a month, and that's nearly impossible. And if you do it, you probably won't be able to do it again. And I think that if you want to really live off the markets and become a full-time trader, it's about learning the skills to be consistent. It's about, hearing from the 14 traders that we interviewed and seeing how they all trade differently and learning some of their trading strategies, because some of our traders really do share the way they look at the markets, and trying to see, first of all, which resonates with you. And then also trying to gather some of the tips that they have to basically shortcut your path to full-time trading, because it's not about, you can't become a full-time trader in a month. That's unrealistic. But, there's a lot of things that you can do to hopefully shortcut the process and not take as long as a decade, for example.
It's also funny how traders kind of find their specialty and they are able to stick to it. Like some guys we've interviewed, they just kind of scalp and that's all they do, and they aim for like really small targets. Some guys are, I remember David Floyd, he's kind of aiming for only 20% a year. That's all he can do is like trying to catch these small moves and then back and forth and like trying to just kind of catch these small trades. He's looking for like the big like trend following, like the 30%, 40%, 50% a year. He's trying to like go for a very, very specific style that works in multiple conditions. That doesn't work well when it's trending really fast, but that works when it's kind of sideways or kind of more like choppy. And he's doing really well like this. He knows what he's good at and kind of just stick to it. So it's good to see that traders find their kind of specialty and then they eventually stick to it and profit from it.
And I also think that it's really fascinating that they also find the instrument that they specialize in. And I think that was a really consistent theme, which is that, they pick either they trade NQ or they trade euro dollar, dollar yen, or they trade gold, for example. And they really just try to master it, and that they don't even need to think twice about, how it moves at the market open, or what is the value of the movement and the tick value or the point value. It's all, they get to a point where it's all instinct and second nature to them. And I think in many ways, for me, it's the same. I've been trading for 20 years, and it's hard sometimes to explain the way I trade, because it is in many ways instinct, and it's just the experience of being so in tune with the market and being understanding, being able to have watched this for so long. And I think, the only way to do that is to really, rather than cast a wide net, to get really narrow in the time frame you want to trade, in the instrument that you want to trade, that you really understand what's the way it's supposed to behave during that period. And a lot of our traders trade the market open, right? So they trade the equity market open, so they know exactly how the instrument is supposed to behave around the market open.
And this is the stuff you read in the morning, kind of changes your whole day and really changes the mindset about trading, and really puts you in sometimes a different perspective on things that you might not think about if you're always stuck in the day-to-day or your same trading routine. Hearing from these kind of 14 traders is good to just expand your horizon and think about different things. So if you want to check it out, it's this book over here, Pro Trading Secrets. We wrote this book together. You have it in your background as well. Tell me where people can find it and kind of how can they get a read of it.
So you can find it on Amazon. You can find it on barnesandnobles.com. Now they have the Kindle version. They also have the audiobook version. So there's a lot of different ways that you can access the book. Go on some of the major book sites, and you'll be able to type in Prop Trading Secrets or my name or Etienne's name, and you'll see the book. And we've got some great reviews. People really like it, and I certainly hope everyone else does too.
Kathy will put a link below for that. People can check it out. Put all those links in the description here below. Also the podcast channel, they can check it out that way. I appreciate your time here, of course, Kathy, to discuss this book and how you've been able to put this together. And hopefully people can grab it and leave us a feedback and how they like it.